How many stocks should you own in 2023? Do you want to invest in more than one stock? Have you enough money to invest? And are you willing to take risks? Then you should maintain a good stock portfolio. Building a stock portfolio to help you reach your financial objectives is difficult. Diversification is an important factor to consider when deciding how many stocks you should own. Several things determine how many shares of a certain stock to buy. You should think about how to spread your money around, and if you have enough money to purchase fractional shares of a stock, then you should invest accordingly. Let's talk more about why it's important to have a diversified portfolio, how your investment strategy should change based on your short-term or long-term goals, and how you should always keep an eye on your portfolio based on how the market is doing. So, to assist you in figuring out how many stocks you should invest in, we have brought some important information for you to maintain a good stock portfolio. क्योंकि हमें चिंता है आपके कल की. In this video, we are going to discuss the following. A diversified portfolio, why do you need it? Importance of having multiple stocks in your portfolio. Some best stocks that you should add to your portfolio for 2023. A well-balanced portfolio will typically consist of 20 to 30 different stocks. Diversify your investments when you put money into the stock market so that the performance of any one company doesn't have a big effect on the value of your portfolio as a whole. This reduces the investor's exposure to non-systematic risk. The more stocks you have, the more diversified your portfolio will be. But it is unrealistic to have too many. The goal is to spread your investment risk among many different stocks while fully grasping why each is a good bet. A diversified portfolio. Why do you need it? The risk associated with investing may be mitigated by spreading it among many assets that tend to do well at various times, a method known as diversification. Don't risk everything on a single venture. However, how do you decide between all of the possible options if that's the case? Do you trust your instincts and choose things at random? You shouldn't do it. The selection of uncorrelated assets is made by fund managers using a combination of statistical methods and in-depth market expertise. Diversifying your holdings with low or no correlation assets is important if you want to lessen the impact of possible losses. Historical returns calculate a correlation value ranging from negative 100% to 100%. The correlation between two assets is a statistical measure of the regularity and magnitude of price changes in those assets. Two or more assets are highly linked when their prices move simultaneously in the same direction. They are said to be negatively linked if the price of one item rises while the other falls. If the correlation between two assets is zero, we say they are non-correlated. When two assets are uncorrelated, changes in the value of one do not impact the other. A diversified portfolio that includes stocks, bonds, commodities, and alternative assets may reduce exposure to market swings and other sources of portfolio volatility. With smart diversification, you can weather the storm of a failing asset class by making up for it with one that is going up. For the best results, investors should put together a portfolio based on how much time they have and how much risk they are willing to take. The smart investing method can also serve as a roadmap for helping you secure and develop your financial future. S for safe, bonds, FDs, and gold. M for market-linked, domestic and international equity, mutual funds, ETFs. A for alternative investments, real estate, private investments. R for retirement planning, provident fund, pension funds. T for tax saving, tax planning, and insurance. You could have a cutting-edge, well-balanced portfolio with smart investing. If you follow the principles of smart investing, you may construct a diversified portfolio that increases your chances of a profitable return and protects your capital. Diversifying one's portfolio is crucial to dampening the effects of fluctuations in the market. Even though it can be hard to find assets that don't go together, it is possible to build a portfolio with less risk for a given expected return by diversifying across asset classes and locations. Importance of having multiple stocks in your portfolio. Diversification is the core of financial planning, and the old idiom, "Don't put all your eggs in one basket," sums it up well. You risk losing everything if you put all of your savings into the stock of a single firm, and that company goes bankrupt. If you invest in two different firms rather than just one, you can cut your risk of losing money from 100% down to 50%. Spreading your money among 4 firms lowers your risk of loss from 100% to 75%. The relationship between risks and profits is linear. The potential for loss or gain associated with various asset classes varies widely. To reach your financial goals, you should spread out your investments to reduce your risk of losing money and increase your chances of making money. For this reason, diversity is important to successful financial planning and portfolio management. Some best stocks that you should add to your portfolio for 2023. Some stocks had sustained gains of many months or even years during these bull market periods. Momentum stocks are the ones that are currently on the rise. Momentum investing is another common strategy. This means buying stocks that are doing well and avoiding or selling stocks that are doing poorly. Some market segments are growing so rapidly that they are virtually going vertical, and no one seems to be discussing it. One of them might increase by as much as 832% by 2030. This method is based on the assumption that rising stock prices will continue to grow and falling stock prices will fall. The goal is to take advantage of uptrends by purchasing or working with the momentum. With this in mind, we are providing 5 multi-bagger stocks that have increased by at least 100% over the previous year. These shares are trading close to their 52 weeks high and have a good chance of growing because the industries in which they are involved are strong. For 2023, keep an eye on these stocks, right? So let's begin. Number 1. Finitex Chemical. Recent trends have improved the outlook for India's chemical industry. Several nations have moved some of their businesses to India as part of the China Plus One plan to reduce their reliance on China. Further, Indian specialty chemicals firms have benefited from the European Union's current energy problem. As European businesses temporarily close down because of a lack of energy, their customers start to buy from companies in India. Because of this, you have to keep a list of the best specialty chemical companies. Finitex Chemical is one of the businesses that have earned the reputation it has. The textile, building materials, water treatment, fertilizer, leather, and paint sectors are all served by Finitex Chemical's products. As the market leader, Finitex offers its customers worldwide a full range of textile services, including pre-treatment, dyeing, printing, and finishing. Over the past year, the share price of Finitex Chemical has gained 168%. Let's have a look at Finitex's share price performance for 1 year. Number 2. West Coast Paper Mills. In 2022, most paper stocks increased. India decided to cut down on plastic and the pollution it causes. As a result, paper and businesses that make paper goods make a lot more money. On July 1st, the plastic ban became official. Because paper may be used as a replacement for plastic, paper companies stand to gain from this. The reopening of schools and workplaces in most states has also contributed to the uptick in paper stock prices. The future seems bright for paper stocks as children return to using paper for reading and writing instead of PDFs. Even a dull industry like paper has seen its share of protracted downturns. It took a while, but it has slowly regained its old glory over the last year. West Coast Paper Mills was the company whose stock increased. West Coast Paper Mills' stock price increased by 161% during the last year. Let's have a look at West Coast Paper Mills' share price 1-year performance. Number 3. Monte Carlo. Monte Carlo is a top-tier branded clothing manufacturer, stocking everything from woolens to cotton blends, to knits and woven for men, women, and children. The company's sales and profits have increased exceptionally during the most recent quarters. As cotton costs dropped and business opened more stores, revenues at the textile firm soared in the quarter ending in June 2022. The corporation established 11 more premium brand stores. By the end of March 2023, the company hopes to have opened a total of 30 stores. According to a filing with the stock market, the business reported record sales across all divisions and a return to normalcy. Mr. Market has awarded Monte Carlo Fashion's stockholders in light of the above considerations. Over the past year, the share price of Monte Carlo has gained 144%. Have a look at the 1-year performance of Monte Carlo's share price. For the year, the company's net profit came in at 1.1 billion rupees, which is a 72% growth and also the highest in the company's operating history. Number 4. Maharashtra Seamless Limited. Like its sister companies, Jindal Pipes and Jindal Drilling Industries, Maharashtra Seamless was founded in 1988 as part of the DP Jindal Group. Most of the company's output comes from its Raigad, Maharashtra production facilities, where seamless pipes are the main product. It is the leading manufacturer of seamless pipes in the United States and can produce OD pipes up to 20 inches in size. Competition is low in this market niche. The stock price of Maharashtra Seamless has increased by 163% during the last year. Have a look at Maharashtra Seamless stock price 1-year performance. Promoters of Maharashtra Seamless have been increasing their interest for 4 consecutive quarters, as seen by the company's ownership pattern. The purchase of shares by promoters is often seen as favorable. Moreover, the company has a solid financial standing. Market analysts have a consensus that the firm may anticipate robust orders from regions like the Middle East and Europe going ahead. Number 5. TCPL Packaging. 21st Century Printers. TCPL Packaging produces fold cartons, printed blanks and outers, litho-lamination, blister packs and flexible packaging for the food, fast-moving consumer goods, FMCG, cigarettes, liquor, pharmaceutical, pesticide, and stationery markets. The company's long history in the sector offers it an advantage. The firm has been operating for almost 30 years, during which it has built strong bonds with consumers and suppliers. The stock price of TCPL Packaging has increased by 140% during the last year. Here is the 1-year performance of TCPL Packaging's share price. Capacity expansion and improved financial results contributed to the improvements of this company. The firm has increased production capabilities by adding a second line to its flexible packaging facility. At the end of this video, the final answer to the query of how many stocks you should own in 2023 is unique to each individual and their circumstances. Please keep the following things in mind. How small amount of capital is available for investment? Whether you're looking to spread your bets across many stocks or you want to put all your money in one stock. Commissions or brokerage fees you have to pay, if any. Please subscribe to this channel and press the bell icon so you don't miss any new stuff from this channel. Tell us your desired stocks that you're going to add to your portfolio in the comment section below.